Welcome back. The market has actually come off from the highs quite a bit. The Nifty is now absolutely flat, and the Bank Nifty as well has lost most of its morning gains. On the losing end, you have a lot of companies. City Union Bank, of course, is still down about 5%, but you have a lot of the sugar companies that are under pressure. Fertilizer companies are coming off. NFL is down about 3% Inox Wind, LT Foods, Deepak Fertilizers, a couple of other stocks that are under pressure right now. But Reliance has announced the launch of its FMCG brand Independence. The brand will offer a range of products including edible oils, pulses, grains, packaged foods and several other daily need products. To discuss what this could mean for another player in the space and what this does to the competitive landscape, we're joined by Sanjeev Asthana, the CEO of Patanjali. We'll also be, of course, talking about their business and the way forward. Sanjeev, thanks a lot for joining in, and greetings of the season to you. There is, in any case, a lot of competition in this space currently. And now with such a big, such a behemoth entering this space with their new brand, what do you think this would do to the competitive landscape? And how are businesses like yours ready to wade through this competition? Sanjeev, is my voice reaching you?
So thanks for thanks for having me on the show. And so clearly, Reliance is a formidable company. And incidentally, that's one of my erstwhile companies where I've worked as well. And so we respect the competition. We believe, they're going to be a strong player with the kind of retail footprint that they have. And
we can't.
That why this may happen, but we ourselves have a very strong area of products, which is going to be driving this change. And so we are pretty confident that we should be able to not only meet any challenge head on, but we have confidence in our own product portfolio, our own reach, what we have, and the strategy that we have in place.
Hi, Mr. Asthana. Good morning. So, if you could tell us, you must have signaled out some strengths that you have, right, in comparison to Reliance. What are those, and how will you guard your market share?
So, look, we have basically the product range that we have. Reliance's right now entries pretty much in the areas of the grocery segment. Our unique segment, the foods business that we acquired, carries very unique products which are IP'd, where there's a strong brand equity which Patanjali has. Right from things like honey and Chyawanprash and very special juices, herbal juices. Our atta, biscuits, etc. So we are pretty confident that the space is large. We respect Reliance and we respect all of the competition that we have. But I think our growth plans continue afoot. We will continue growing our business 15 to 20%, and that is the plan. And we're pretty confident that the Indian market is supportive. Our strategies are pretty much in place, and 2023 should be a good year for us.
Okay, but this is also a year when there is massive competition, right? Not just from Reliance, but you have other large players like the Adani Group as well entering into this space. At a time when, in any case, margins have been a bit subdued, especially in the edible oil segment, do you think all of this competition could put more pressure on margins? Are you ready for that? And if yes, what could the ballpark range look like for the year?
For the year, while giving a guidance will not be appropriate, but we are pretty confident that we should be pretty much there in terms of what we originally stated. Barring one quarter in the second quarter, which we had this blip because unprecedented events, what the entire world faced in terms of the commodity inflation and then sudden drop in prices. I think we are pretty confident that we should meet the numbers in rest of the quarters. And our growth plans are pretty much in place, which should be the guiding force in the way this is going to go forward.
Mr. Asthana, good morning. Prashant here. On palm oil, because we saw such a massive rally and then such a sharp fall, will we see any inventory losses for the company in the quarter, in the third quarter?
None at all. In fact, the prices have rallied since we spoke last, and they've more or less covered the entire drop which was there. So we're pretty comfortable on that front. And you will see a significant uptick, both in our margins and the revenue. And we are pretty confident. So that was one-off sort of situation, which is, pretty unprecedented in the history of, the edible oils or the commodities. But I don't expect that we'll see a repeat of that.
Improvement in margins and and overall top line growth, etc. Right? Well, that's what you're talking about.
Yeah, so both top line and bottom line, we should be pretty much there
Yeah.
because this year we have a full quarter this month of the food FMCG, the food business, the biscuits business, and all the businesses will be taking together. So I think we should be pretty comfortable.
Last time you were on, we did, and you've been open about saying that rural has been slow, right? Q2 was a little weakish, but you'd said third quarter, fourth quarter, things will pick up. Could you give us an update? Have things picked up to the extent that you expected?
They have. In fact, both the two parts. One was the the harvest of the crops. Second was the marriage season. So the third quarter has been pretty robust. We have to see that how this fourth quarter will roll out. But broadly, if I look at the rural demand, I think from a downturn that we faced, it has started picking up again. And so to that extent, we are pretty okay that we'll see this quarter coming better.
Okay. So you had guided for the food business to see revenues of around 30 to 35,000 crores in the next 5 years and margins at 15 to 20%. 5 years is a long time out, but would you still stick by that guidance and any near-term targets that you'd have?
So the near-term targets are pretty defined. I think we broadly will have some, settlement of the margins to a more regular levels, and which is getting, which will become pretty, the trend line of, around 10 to 15% will be there. And the rest of the business pretty much between 4 and 6% range is what we expect. So pretty much confident on that front.
Final question, Mr. Asthana, before we let you go. The promoter holding is still at around 80% plus, and you need to bring that down. Any timelines? And, how do you plan on doing it? Will it be a fresh issue?
So you'll hear about it very soon. I think it's just a question of, finishing our third quarter, and post that, we'll get started on that. So there's a lot of active interest from the investors, both the existing ones and the new ones, and you will hear that in next couple of weeks' time.
Oh, so early 2023 is what we should hear from it? January first half is...
Absolutely.
Okay.
All right. Thank you very much, Mr. Asthana. Look forward to that and look forward to speaking with you again soon. Thank you very much for your time here on CNBC-TV18. Now, let's talk about a company which we rarely do talk about. I mean, although we discussed it recently because the stock price move. I'm talking about New India Assurance. If you can, I don't know if you have a quarter-to-date chart. Today, it's not doing very much. But this quarter, starting October till now, and we're almost done with December, it's up 55%. It's by far the single best quarter in terms of stock price performance for New India Assurance. What is really happening, what's really going on? We are now joined